All right, everybody, welcome back to the deep dive where we like to just really get into the nitty gritty. And today we are talking Nike.
That's right.
Earnings call. So, for those of you who haven't had a chance to listen to it yet, we're going to break down kind of what we saw as the most interesting points.
Yep.
And maybe some things that stood out to us right off the bat. I mean, I think we can both agree that, there's kind of a theme of some pretty big strategic shifts happening at Nike right now.
Absolutely. And I think, the first place to start, as always, is with the headline numbers.
Sure.
And those really do tell a story of, some significant change underway. So overall revenue declined by 9% as reported and 7% in currency neutral term.
Okay.
And just a quick reminder for listeners, when we talk about currency neutral, what we're doing is stripping out the impact of currency fluctuations, the dollar strengthening or weakening against other currencies.
Right.
Because that can really distort the underlying picture of how the business is actually performing.
For sure. So it's like a cleaner way to look at it.
Exactly. Yeah. It gives you a better sense of, are they actually selling more or less product?
Right.
Regardless of what's happening with exchange rates.
Makes sense. And so, that revenue decline kind of rippled across a lot of their different segments. We saw that their Nike Direct business, which, for folks who are familiar, that's basically their own channels, right?
Yeah, they're direct to consumer, so online and their own physical stores.
Right. So Nike Direct saw a pretty substantial drop. I think it was 10%, if I remember correctly.
Yep, 10% decline in Nike Direct.
And within that, I mean, even their digital sales, which, you would think in this day and age would be kind of a bright spot for a lot of companies, even those took a hit.
Yeah, that was a big surprise to me, I think, going into this call. Digital sales were actually down 15%.
Wow.
And even their physical stores weren't immune to this. They saw a 2% dip, so really kind of across the board.
Yeah, so it wasn't just like, a channel shift or anything. It seems like there's some broader factors at play here.
Yeah, it's not just that people are choosing to shop in stores versus online. It seems like there's, something more fundamental going on with demand.
Right, and this wasn't limited to just their own channels either, right? I mean, we saw some weakness in the wholesale side as well.
Yeah, their wholesale business, which is basically, selling through other retailers.
Right.
That also declined by 4%. And I think what's notable here is that they specifically called out challenges in Greater China as a primary factor weighing down those wholesale numbers. So it seems like, the China market in particular is a bit of a soft spot for them right now.
Okay, so we've got sales down across the board pretty much. Not a great start to the conversation. But let's talk about their profitability. How did their margins hold up?
Yeah, so this is where we really start to see some signs of pressure, I would say. So their gross margin, that's the profit they make on each product after accounting for the direct costs of making it.
Right.
That decreased pretty significantly. It fell by 330 basis points to 41.5%.
Okay, and just for our listeners who maybe aren't as familiar with the financial jargon, a basis point is basically just 1/100th of a percentage point.
Yeah, so it's a way of talking about, small changes in percentages.
Right, so 330 basis points, that's a 3.3% drop.
Exactly, and that's a pretty noticeable contraction in their gross margin, and it suggests that, either their costs are going up,
right,
or they're having to lower prices, or maybe a combination of both.
Yeah, and that's something we're seeing a lot of companies grapple with right now.
For sure, with their inflation and supply chain issues, it's definitely a tough environment.
Okay, so margins took a hit. Any bright spots on the financial side at all?
Well, there was some positive movement in their operating expenses. So SG&A, that stands for selling and general and administrative expenses, basically their overhead.
Right.
That was actually down by 8%. So it seems like they are taking some steps to control costs.
Okay.
And ultimately, their earnings per share, which is, kind of the bottom line number that a lot of investors focus on.
Yeah.
That came in at 54 cents.
Okay.
So not a disastrous number, but I think the overall tone of the call was definitely one of caution, as they navigate these pretty significant strategic adjustments that they're making.
Right. So a quarter of, contraction and some cost management going on. But it sounds like they're making some pretty deliberate moves here, and this win now strategy that they keep talking about. What's at the heart of that?
Yeah, so win now really signals a narrowing of their focus.
Okay.
They're really concentrating their energy and resources on 5 key sports.
Okay.
Running, basketball, football training, and sportswear.
Got it. So they're really kind of doubling down on those core areas.
Exactly. And geographically, they're also prioritizing, 3 major countries that they see as crucial.
Okay.
China, and the United Kingdom.
Makes sense.
And then even within those countries, they're hyper-focusing on 5 key global cities.
Wow.
New York, Los Angeles, London, Beijing, and Shanghai.
So really laser focused.
Yeah, I mean, this is a pretty big departure from their previous strategy, which was, much broader.
Right.
They were trying to be everything to everyone. And it seems like they're realizing that, in this current environment, they need to consolidate.
Yeah, focus on those key markets.
Exactly. Prioritize where they think they can really win.
Makes sense. So this focus, we're talking about in terms of geography, but how is this playing out in terms of the actual products that they're selling? Are we seeing like shifts in what's performing well versus not?
Absolutely. I mean, one of the most striking things to me looking at this earnings report was the really stark contrast in performance across their product lines.
Okay.
So on the one hand, you have their performance-oriented business, particularly in training and running.
Okay.
Those actually showed growth.
Interesting.
And they attributed that to the success of some of their recent new product launches in those areas.
Right.
So it seems like, people are still buying performance gear.
Right.
But on the other hand, their Nike Sportswear and the Jordan brand, those actually experienced declines.
Huh.
And notably in their classic footwear franchises.
You're talking like Air Force Ones and stuff.
Yeah, exactly. The Air Force One, the Air Jordan 1. Yeah, these are shoes that have been massive drivers for them historically.
Iconic shoes for sure.
Yeah, and the fact that they're seeing declines there suggests to me that there's, either a shift in the market or maybe a shift in their strategy.
Right. Like those classic styles are maybe not resonating as much with consumers anymore.
Yeah, or maybe they're just not pushing them as hard. Maybe they're shifting their focus.
Right.
And they did address this directly on the call. They said that their approach is to what they call right size these classic franchises.
Okay.
So not necessarily discontinue them entirely, but kind of reduce their contribution to the overall mix.
Yeah, pull back a bit.
Yeah, exactly. And they really emphasize this strategic move towards diversifying their product portfolio.
Okay.
With newer styles that are starting to gain traction.
Okay, and what are some of those newer styles? Are they calling out any specific ones?
Yeah, they mentioned a few specifically. They called out the Vamero 5, the Nike Shox Air Superfly LD1000, and the Air Max News.
Oh, wow. Okay, so some like kind of retro styles in there mixed with some newer innovations.
Yeah, exactly. It seems like they're trying to find that balance, between, their heritage and future growth.
For sure. And speaking of future growth, were there any like completely new products or brands mentioned that caught your eye?
Yeah, a couple things stood out to me. First of all, they highlighted the strong initial performance of some of their very latest innovations. So in the running category, they specifically called out the Pegasus Premium and the Vamero 18.
Okay.
And then in the training and sportswear category, they highlighted the 247 apparel collection.
Okay.
So those are, brand new products that are already seeing some success.
Got it.
But perhaps even more significantly, they announced the launch of an entirely new brand.
Oh, wow.
Called Nike Scales.
Nike Scales?
Yeah, and this is slated to debut next quarter in North America.
Interesting.
So launching a whole new brand is a pretty big deal.
Yeah, that's a big bet.
Yeah, and it signals to me that they're really trying to find new avenues for growth.
Right. And we'll have to wait and see what exactly Nike Scales is all about, what that brand represents. But, definitely something to keep an eye on.
Absolutely. I'm curious to see what market need they're trying to fill with that.
For sure. Okay, so we've talked about, the kind of geographic focus, the product shifts. How are they adapting to their sales and distribution strategies? Like, what's their approach to the marketplace right now?
Yeah, so this is another area where they're making some pretty significant changes.
Okay.
They're really trying to reposition their Nike digital platform to operate primarily as a full-price business.
Okay, so less discounting.
Yeah, exactly. They're deliberately reducing the number of promotional days and the overall level of discounting what they offer on their own site.
So trying to regain some pricing power there.
Exactly. And at the same time, they're putting a much stronger emphasis on collaboration with their wholesale partners.
Okay, so working more closely with the retailers?
Yeah, so that includes working together on growth plans, refining their assortment strategies so which products are being offered where.
Right.
And even improving the in-store presentation of Nike products.
So it's kind of a two-pronged approach. On the one hand, pulling back on discounts on their own platform, and on the other hand, working more closely with the retailers.
Yeah, exactly. It seems like they're trying to, kind of reassert some control over their brand image and in their pricing.
Right, which makes sense, especially with the challenges that they're facing and the need to kind of regain that premium positioning.
Exactly. They also talked about, continuing to kind of refine and strengthen their internal sales organization,
Okay.
and their overall go-to-market processes. So it seems like there's a lot of internal work happening as well.
Right. So it's not just about external facing strategies. It's also about getting their own house in order.
Yeah, exactly. And then within their own Nike Direct channels, they're putting a lot more emphasis on content and storytelling.
Okay.
And particularly focusing on their performance categories, really highlighting the technical advantages of their products.
Makes sense.
And then interestingly, they also acknowledge that there's a pretty significant marketplace cleanup underway in Greater China.
Oh, wow.
Which likely contributed to some of the sales decline that we saw there.
Right. So it sounds like they're really trying to address some of the issues that they've been having in China, maybe with over distribution or discounting or things like that.
Yeah, it seems like they're trying to kind of reset the market there and establish a more sustainable long-term presence.
Okay. So lots of moving pieces on the marketplace strategy side. But what about their overall brand image? Are they taking steps to maintain or boost their brand momentum amidst all of this?
Yeah, they're definitely investing in that area. They talked about increasing their spend on both brand marketing and sports marketing.
Okay.
And they pointed to their campaigns around big events like the Super Bowl and the NBA All-Star Weekend as examples of that. So, trying to really be present at those key cultural moments.
Right, those big platforms.
Exactly. And I also emphasize the importance of athlete storytelling and on-the-ground activations in those key cities that they've identified.
Makes sense.
So it seems like they're really trying to, create those high-impact moments that will keep the brand top of mind.
For sure. Okay, so we've talked about marketing. Let's talk about inventory, because that's been a major talking point across the retail landscape lately. How is Nike handling their inventory levels?
Yeah, so they did report a 2% decrease in overall inventory year over year.
Okay.
But they also acknowledged that, inventory still remained elevated across all of their geographies.
Okay, so they're making progress, but still some work to do.
Exactly. And they attributed that to the timing of the actions that they're taking as part of their, this win now strategy.
Right.
And they specifically mentioned that while they're starting to see Air Force One inventory begin to stabilize, the levels of Air Jordan 1 and Dunk inventory are still considered to be pretty high.
So those classic styles are still a little bit overstocked.
Yeah, it seems like it. And part of their plan to address this is to increase their focus on liquidating closeout product through their Nike factory stores.
Okay, so we might see more sales at the outlet stores.
Exactly. Yeah. So if you're looking for a deal on some Nikes, that might be a good place to check.
All right, good to know. Okay, so we've talked about the overall picture. Let's kind of break it down by region now. How did each of their key geographies perform this quarter?
All right. So starting with North America, revenue was down 4% there.
Okay.
And their Nike Direct business saw a 10% decline.
Okay.
But interestingly, their wholesale channel actually experienced a 3% increase.
Oh, wow. So a little bit of a mixed bag there.
Yeah, exactly. And they specifically noted that training and running showed positive performance growth in North America.
Which aligns with what they were saying about their product strategy.
Exactly. Those are areas where they're seeing strength globally.
Right. And what about Europe, Middle East, and Africa? So the EBA region.
Yeah, EMEA saw an overall revenue decline of 6%.
Okay.
So similar to North America, their Nike Direct sales were down significantly by 12%.
Okay.
While their wholesale business saw a smaller decrease of 3%.
Got it.
And they also highlighted that, their performance categories are gaining momentum in EMEA.
Okay.
And that they're working on initiatives to kind of elevate their brand presence in partnership with key wholesale accounts in that region.
Okay, so sounds like a similar story to North America in some ways.
Yeah, kind of a mixed bag, but with, some pockets of strength in those performance categories.
Okay. And then we've already talked about Greater China being a challenging market. What were the specific numbers there?
Yeah, so in Greater China, they experienced a pretty substantial revenue decline of 15%.
Wow.
Both their Nike Direct and wholesale channels saw significant drops 11% and 18% respectively.
Okay.
And as we mentioned, they attributed this to a combination of the challenging macro environment in the region
Right.
and their own aggressive marketplace cleanup efforts.
Okay.
But they did point to a strong consumer response to their new running and basketball products within China.
Okay.
So, that could be a positive sign for the future.
Right. So maybe a little glimmer of hope there.
Yeah, exactly. It suggests that, once they kind of work through these near-term challenges,
right.
There's still a strong appetite for Nike products in China.
Makes sense. And then finally, let's look at Asia Pacific and Latin America. So APLA.
Yeah, so APLA reported a 4% decrease in overall revenue.
Okay.
Both their Nike Direct and wholesale channels were down by the same 4%.
Got it.
Performance across the different territories within APLA was a bit mixed. Japan and Latin America actually showed a return to growth during the quarter.
Okay.
But they also noted strong momentum in running in that region as well.
Okay, so really a very, very picture globally. But China clearly presenting the biggest hurdles right now.
Yeah, it seems like it.
Okay, so looking ahead, what kind of expectations and guidance did Nike provide for the near future?
Yeah, so they painted a pretty clear picture of what they expect moving forward. They're anticipating that their sport performance categories will be the primary driver of growth.
Okay.
With a greater contribution coming from new product innovations.
Okay, so doubling down on performance and newness.
Exactly. And they also foresee a continued trend of decreasing contribution from their classic footwear franchises.
Right.
They're actually projecting a more than 10 percentage point reduction in that contribution in the next quarter alone.
Wow, so pretty significant shift away from those classic styles.
Yeah, they're really serious about this diversification strategy.
Okay.
And then due to their, strategic shift towards a full price model in their digital business,
right.
They're actually anticipating a double-digit decline in digital traffic in the next fiscal year.
Wow, so they're willing to take a hit on traffic in order to preserve their margins?
Yeah, it seems like they're prioritizing profitability over volume. But they do expect their wholesale business to return to growth once the marketplace cleanup is completed.
Okay.
And, once they have a more consistent flow of new products coming through.
Right.
Now, for the upcoming fourth quarter specifically, they're projecting revenue to be down in the mid-teens.
Okay. So a pretty significant dip.
Yeah, and they're also anticipating a significant decrease in their gross margins in the range of 400 to 500 basis points.
Wow, that's a big hit.
Yeah, they said that part of that is due to the impact of new tariffs.
Okay.
And then finally, they expect their SG&A expenses to be up in the low to mid-single digits in the fourth quarter.
Okay, so a lot of pressure on the pocketability side in the near term.
Yeah, exactly. I mean, they're really prioritizing the long-term health of the brand and, this shift in their product focus, and that's going to have a noticeable short-term impact on their financials.
Right. It's like they're willing to kind of take some pain now.
Yeah.
In order to set themselves up for success down the road.
Exactly. It's a bit of a short-term pain for a long-term gain strategy.
Yeah, makes sense. Okay, so we've gone through all the numbers, all the strategic shifts that are happening. But now for our segment where we put on our speculative hats.
All right.
This is not financial advice.
Yes, the legal disclaimer.
Yes, exactly. So, based on everything we've just discussed, what's an outrageous but plausible trade idea that come to my mind?
Okay, so given Nike's very deliberate strategy of cleaning up their marketplace, particularly in China,
right,
and their focus on regaining full price positioning in their digital channels,
right.
I think this suggests a potential opportunity in the logistics and inventory management space.
Okay.
So hear me out here. What if we consider a long position in companies that specialize in providing, advanced analytics and technology-driven solutions?
Okay.
For supply chain optimization and inventory forecasting.
Okay.
Specifically for the retail sector.
Right.
So as Nike and potentially other major players, as they navigate these complex transitions.
Right.
Involving significant inventory adjustments and channel realignments.
Yeah.
I think the demand for these sophisticated tools
right.
to manage those processes efficiently could see a significant uptick.
Makes sense.
Over the next year or so.
Yeah. So you're basically betting on the picks and shovels.
Yeah, exactly. The companies that provide the behind-the-scenes infrastructure
right.
to support these large-scale strategic shifts.
Very interesting. Very interesting. And definitely fits the outrageous bite plausible bill. I like it. But But remember, everyone, this is purely speculative
Absolutely.
and not financial advice. Always do your own thorough research before making any investment decisions.
Couldn't agree more.
All right, well, that brings us to the end of our deep dive into the latest Nike earnings call. We've gone through a lot.
I have.
We've dissected the key financial results. We've examined their, really significant strategic pivots.
Big changes.
Yeah, and we even explored a, potential, albeit highly speculative investment idea.
Just for fun.
Just for fun, exactly. But, we hope this has given you a clear and concise understanding of, the key dynamics at play here.
Definitely a lot to think about.
Yeah, what aspects of this earnings call stood out most to you? What are you still wondering about? We encourage you to, keep digging and form your own informed opinions. But for the deep dive, that's all for today.
Thanks for listening, everybody.
Thanks, everyone.